Hello everyone, and you're watching Bitcoin Bubble news channel. This means that in terms of markets, we've had 18 months of incredibly good results. You can make money by throwing a dartboard blind and folding. That's great. Right now is a great time for business because interest rates are going down and more money is coming into the market. Some of these goods will likely keep going up until around the middle of 2026 because inflation starts to rise later in the cycle. That means we have a great time before returns. Remember to take a step back. Rates are at 5.5%, headline CPI is at 2.5%, and true inflation, which I think is rising, is at 1%. Don't believe any of the other stuff you hear. Rates are 300 basis points too high. They're going to drop a lot. It will feel a lot better for everyone. People are going to spend again. Companies are making more money. It will feel great for everyone. The US Federal Reserve gave us a rate that we were all looking forward to. Cut on Wednesday, taking 50 basis points off of its key interest rate. In March 2020, this was the last time something like this was said. Before the meeting on Wednesday, there was a lot of talk about whether the committee would cut rates by 25 or 50 basis points. Most experts thought they would only cut rates by a quarter percentage point. The Federal Open Market Committee said in a news release that the targeting range for the federal funds rate was lowered by half percentage points to a range between 4.75% and 5%. This was done because of progress made on inflation and the balance of risks. The FOMC said that when they think about making more changes to the goal range for the federal funds rate, the committee will carefully look at new data, how the outlook is changing, and the balance of risks. Investors, traders, and fund managers around the world have been waiting for this exact moment since 2022, when the central bank began raising rates at the fastest rate in history. Raoul, the founder and CEO of Real Vision, says that this is the start of what he thinks will be a very profitable few months for the world's markets. Paul is sure that global liquidity conditions are about to get much better for asset prices after the Fed cuts rates for the first time in a way that was bigger than expected before the November elections. The famous macro analyst and former Goldman Sachs executive says that all asset classes will benefit from the upcoming liquidity pump. However, he says that tech stocks and crypto will benefit the most because they are the only asset classes that have done much better than the Fed's balance sheet. If Pal is right, the prices of crypto assets will quadruple before the end of 2025. They will go from just over $2 trillion to $10 to $10 to 15 trillion next year and $50 to 100 trillion by 2030. A few days ago, at the Enterprise Cayman meeting on Tuesday, the CEO of Real Vision gave his thoughts on the current state of the markets and what to expect in the future. As we show you parts of the conversation, please like this video, subscribe to the channel, and turn on post alerts to get more videos like this. Glad you watched and have fun with the movie. This is why I use a mix of long-term stable trends to look at markets. First, how things have changed over time, then the business cycle, and finally how liquid things are. And I've found that my theory has changed over the years as I've learned more about how liquidity has become almost the only thing that drives returns. Then there are some extra returns for long-term trends. The business cycle goes up and down, which is what I mean by all of that. You can understand the business cycle with the help of the ISM. We've reached the point in the business cycle where things should start to get better for the economy. That stuff about cause of a recession was from 2022. We should see growth in the coming years, and rates are going down at the same time. In the course of my work over the years, I came across something I call the Everything Code. That may sound like a cocky title, but it was really shocking. You were one of the first people in the world to notice that the world's debt was reset in 2008. In a debt jubilee, you don't pay any of your bills back. In this case, you had an interest rate jubilee. After that, every important government and central bank in the world agreed not to pay interest. That was the idea of having no interest rates. The story seemed like something we could get into, so we bought it. It was not a stimulus. In fact, it was a jubilee and you don't have to pay your interest rates. Why? Because every government in the world owes more than their entire GDP. Now, GDP tends to be slow when 100% of GDP is in debt and the population is getting older. So the US GDP trend rate is about 1.75% or 2% for simplicity's sake. And let's say that 2% has been the average interest rate over the last 10 years. That means that all economic action is used to pay off the debt's interest. Problem is that corporations own more than 100% of GDP and have a lot of debt. There is only one game. Everything else doesn't matter. This debt cycle shows that every asset class, every country, and every central bank are all very closely linked to each other. What's with all this debt? In 2008, all interest rates were set to zero, and all government bills were restructured with terms that changed from 3 to 5 years. It's great that you have a 4-year rotation. Plus, the same thing happened after World War II in the 1950s when we had the same problem and did the same thing. And back then, we didn't have zero interest rates. Instead, we had yield curve control. But what they do is print money every time the debt is due, which is this year and next. In the US alone, we have 10 to 11 trillion dollars in debt that needs to be rolled over. It is more than just the bank sheets. There is liquidity in every part of the system, and everyone knows how to play the game. They're all doing it together right now. So cash flow is what drives it. This is the magic thing that happens when you start to change markets. The SP 500 hasn't gone up or down since 2008-9 because it fell in 2008. This is because Fed net liquidity is the best way to measure liquidity in the US. It hasn't led anywhere and has almost no real return. Gold is the same. When you use influence on real estate, it's different, but when you don't, it doesn't seem to go anywhere. In fact, only two items have gone somewhere else. There are only two things in the world that do better than money going down in value. Debasement is when you print too much money to pay off your own bills, like using a credit card to pay off a credit card. Tech and crypto are the only things that matter. Powell says that the news of multiple rate cuts by the Federal Reserve and other central banks are just more cowbell. Powell thinks it's inevitable that central banks will print a lot of money to keep the world's banking system from falling apart. The markets, especially the Bitcoin market, which is known for being very volatile, will be hit by the huge flow of cash. Some of that fluctuation happened after the rate cut was announced on Wednesday. Bitcoin went from a 24-hour low of $59,212 to a high of $61,135, a gain of hundreds of dollars in just minutes. Powell thinks that when the printing starts, which could happen in 2025, Bitcoin and other cryptocurrencies will go through even more up and down price changes, with the most popular cryptocurrency rising thousands of dollars in a single day. This is what Powell calls the banana zone. This is the part of every crypto bull market where prices almost seem impossible to believe as they rise wildly. Or go bananas. Powell says that what we are seeing now is just the start of the banana zone. There is a lot more to come. Come back to the movie. Where are we now? Well, the business cycle is led by cash, which is the main driver. It hit bottom at the same time as the Nasdaq cryptocurrency in October, November, and December 2022. It has been going up, as have those markets. They live every month because they follow wealth. Most other measures, like the Russell 2000, oil prices, and copper, tend to be based on the current business cycle, which is now, and is just starting to get better. As a result, prices for goods are still very low but are beginning to rise. Beginning to see that the Russell 2000 and the evenly weighted SP are now